Hello and welcome to Endeavour's Capital Markets event. Thank you for joining us today. My name is Martino de Ciccio and I am Vice President of Strategy and Investor Relations. The past few years have been transformational for our business and we're now about to take another important step forward. Over the coming days, we will obtain our listing on the London Stock Exchange. We expect this will be a strong catalyst as we will be able to appeal to a wider group of investors with a deeper pool of capital. This will see us become the largest pure gold producer on the premium segment of the LSE. Today's agenda has been put together with the goal of explaining how our business is poised to deliver strong shareholder returns across the cycles. We have made this event as engaging as possible with virtual site visits to operations, 3D tours, videos, and guest appearances. For those who are new to the story, we'll be presenting our unmatched competitive advantage, our high-quality portfolio, and our exciting growth pipeline, as well as our ESG strategy. For those who are more familiar with the Endeavour story, we'll be providing an update of our integration of our recently acquired assets, our 5 years outlook, as well as presenting our new capital allocation framework, which will highlight our enhanced focus on rewarding shareholders. Before we get started, I'd like to draw your attention to the disclaimer and forward-looking statements. And now, I'd like to welcome Sebastien.
Thank you, Martino. Pleasure to be with you today on the cusp of our UK listing. This moment is the culmination of several years of hard work and marks the full turnaround of our business. Given that our business has significantly changed over the last few years, I thought the best place to start would be to look at our footprint across West Africa, where we've put together a great portfolio of assets. We now have 7 operating mines, 6 development projects, and one of the largest land positions in the underexplored West African Birimian Greenstone Belt. Our growth has elevated us to senior gold producer status globally. But most importantly, it makes us the largest gold producer in West Africa, which has now become the second largest global gold producing region. As we will cover in the next section, this gives us unmatched competitive advantage. Given the rapid change in our business, I thought it would be interesting with the next few slides to give you a brief overview of our positioning against peers. While we are a senior producer based on production size, we're particularly proud of our cost structure relative to our peers. Our position on the cost curves ensures that we are resilient across cycles with the ability to self-fund our organic growth while maintaining a strong shareholder returns program. Our cost structure is helped by our strategic focus in the region, which allows us to save costs and realize material synergies, including on supply chain and people. We're proud of the company we've built, and we believe that we are very attractively positioned within the sector. Our capacity to produce at low cost is supported by the geological potential of West Africa. We have focused ourselves on building high-grade mine and discovering high-grade resources, which has led to an increase in our group average reserve grade. At 1.87 grams per ton, our grades are more than 30% higher than the global average reserve grade. This enhances our profitability and makes us more competitive in low-price environments. As you see here, a higher grade profile also contributes to a lower environmental intensity. Our business is underpinned by access to renewable energy sources and relatively green grid power sources and operational efficiency. The chart indicates our relative position on emissions intensity, which we are focused on improving. Our operations already outperform many in the sector, but being good isn't good enough. We're currently exploring several alternatives for further reducing our environmental impact, including investments in solar power. Our target is to continue to reduce our emissions intensity and keep our position among the industry leaders. Next, let's move on to our relative valuation benchmarked against other senior gold companies. We're trading at an attractive price to cash flow multiple and have the highest free cash flow yield in the sector, which we believe is because the market has yet to factor in the free cash flow generation of the new company we've created in such a short period. Also, as we will show you later on, Endeavour is a business with embedded growth options. Our goal has been to run our business like any other business, regardless of the industry we are in. Given the decisions we have taken, we are proud to be able to compete for capital not only within our own industry, but against other sectors. We didn't want to repeat the errors made by others in the last bull run, where companies focused on growth for the sake of growth, costs rose, and shareholders did not see much benefit. Today, the industry is in much better shape. In fact, the best it's ever been. Gold miners are generating healthy cash flows, are paying dividends, building up their balance sheets, and are focused on improving the quality of their portfolio rather than only chasing growth. This bodes well for our industry, which is small compared to other sectors. We, of course, all need to remain disciplined.